Hi, this is Zach Meir with the weekend edition of the Bulletin Board Heroes. It is Sunday, April the 10th. Starting off with the FTSE 100, where we're just revisiting the current situation. The highlight here in the recent past during March was that we had this consolidation after a bear trap just below post-July support around, what was that, the 6,900 level, so one day probe below that. So that bear trap there, accompanied by very strong bullish divergence in the RSI window. The market in March went down 400 points lower than it did in February, around 7,200 in February at the base, and the RSI the same. So that kind of divergence is very rare and very strong, and that's the reason that we had that maybe counterintuitive rally that we've seen over subsequent weeks. Closed the week last week on a high as well, so through recent 76.20 zone resistance. Above that, looking for as high as 7,800, even 7,900 at that November resistance line projection. Maybe that could be seen by the end of the month, which seems again rather unlikely, but we've been surprised on the bullish side all along since the Ukraine dive for the stock market. Final thing to look at is that the RSI around 64 still off the overbought area, so something to keep an eye on there, but at the moment looks like there's a bit of gas in the tank for further moves to the upside. This stage only really back below recent 75.30 support, multi-tested in that area during the course of the last week, would really delay the upside, and only below the 50-day line, 74.30, really cancelling the idea of a move towards 78 or 7900. Back onto the stocks now, and starting off with one which may be an early one for some people, but technicals here seem to be right to highlight the situation. Had a little bear trap there for Actual Experience, not the most sort of well-known company on the stock market, but bear trap below the February-March support around 12.9 pence, and then a flip back up again. We've also got bullish divergence there, so the lower low for April, but a higher RSI trace, and that could mean that the shares are able to turn around and get up towards the upper teens initially, and then up to that January resistance zone around 25 pence. So if you like something new and different, that may be the situation for you to keep an eye on. Obviously, we don't want to see a new low below 10 pence anytime soon. On to one of the best stocks of the year to date, and just amazing rally that we keep seeing here. Ben's Creek. Here we've got the situation where we had a nice up day on Friday, good close to the week. We've got the shares in a rising trend channel that's been in place since November, and the highlight at the moment, really the way that new support for the shares has come in at or above former 84 pence resistance. That is something you only see in the strongest of situations, and that does add further evidence or further proof that we'll head up towards the 115 or 120 area, which is that November resistance line projection, maybe as soon as the end of next month, and only back below, really well below 80 pence, really delaying the upside scenario. And we'd be surprised if we even head back below 84 pence anytime soon. Another stock which is too difficult to resist is Belliscura. Here we had that pullback from the January resistance, and three probes below the 200-day moving average. Final one, I think the week before last. But the highlight here is the way that we've gapped through the 50-day moving average. That's the blue line there at 106. And we've also headed to new April highs above £1.18. The longer we stay above 118, the greater the chance of a move towards £1.50, which is that August resistance line projection. And again, that could be seen as soon as the end of next month. The whole thing started in the recent past with that triple dip below the 200-day line, but bullish divergence, a flat RSI line there, so that hinted that the buyers were coming in well. Always good to see or look at stocks where the bears are trying their best to sabotage the situation. But with Coppels, Canadian Overseas, we've got everything really hinging on that the floor of that gap there from January. That was at 21 pence. We found support just above the floor of that gap, which was a positive, and an up day on Friday, which also is also helpful. If you're fussy, maybe you want to see a break of that that resistance there at 28 pence, which was during the middle of the week. But if you're trying to position yourself in the stock, any dips towards 21 pence look to be the buying zone, and then we head up at least towards the low 30s. But maybe that stock not for widows and orphans. You know, be pretty sharp in terms of monitoring that particular situation. On to Conroy, which gave us a gift of a technical setup a little while back. We broke that resistance line there from back in January, unfilled gap to the upside. That's sort of one of our favorite signals. sharply rising 50-day and 200-day moving averages at the moment, and we closed the week just above that, the middle of that W shape there at 35 pence, above 35 pence. Now we maintain that we're looking for the top of the channel there and retesting December resistance towards 45 to 50 pence. But very impressive that the recent dip for the shares down to the 30 pence area was well above old resistance around 28.5. So when you see that, tends to be a good forward-looking sign. Also looks as though finally, after a long period of consolidation, East Imperial is back. Here we've got a classic bullish divergence situation there. So we had a lower initial April support, but higher RSI low there. So that bullish divergence should be enough to get things going. The old support there around 6 3/4 and a 3 to 4 day bear trap below that. Above 6 3/4 rather, we're looking for resistance, support on the way down, which is around 10 pence over the near term, and then maybe up towards 12 pence by the end of next month. But the key there is that we stay above 6 3/4 as long as possible, and that bullish divergence should help that process along. One of the more interesting oilers at the moment is Empyrean. Here we've got this very decent looking V-shaped bull flag with the pattern there really looks like it's ready to break last month's resistance around 12.1 pence. If we can do that, then the next level up for the shares could be as high as 17 or 18 pence by the end of next month. And upside value while we hold above 10, so not a bad risk reward there. Nice little uptrend line there, multi-tested uptrend line in the RSI window, so that should keep the momentum going over the near term. But the key here is an end of day close above the old March peak at 12.1 pence. Looked at Edenville during the week, and somebody commented that it was good to see the shares back in play. I was anticipating a break of that resistance line there from back in May, which we got in spades on the over the course of Friday. I think earlier on Friday, I think I was looking at when it was around 19 pence or 20 pence, something like that, but a very strong close there. Initial peak there was, initial target there is February resistance at 26 pence. Hopefully we'll see that early next week, and then after that maybe fill the gap from September up to 28 pence. But bullish divergence there as well, and that was the reason for looking at the stock, and that sideways move there between March and April with the bullish divergence certainly helped build confidence. Futura Medical has been somewhat sticky situation over the recent past, but looks as though with this bullish divergence line there from the end of February, and the shares holding on to that, and then the break of that neckline resistance at 29 pence, we could be on our way towards a retest of the initial peaks of the year around 40 pence, maybe by the end of this month. Only back below the 50-day moving average, really at 27 3/4, delaying the upside scenario. It'd be surprising if we fall back below that neckline at 29 pence ahead of a move towards 40 pence. Jubilee Platinum, fantastic on the fundamental front, but the shares slow to reflect that. Here we've had a bear trap from below the initial 2022 support at 14.5 pence, but over the recent sessions last week, good support, a good performance, breaking through the 50-day moving average at 15.5 pence, and that's now rising, which is maybe the key to getting the shares up towards 18 or 19 pence by the end of the month. Seems to be not too ambitious to go for that, and that might finally get Jubilee on a decent path to the low 20s early in the summer, something like that. Finally on our way. KEFI, a lot of speculation here. I'm not quite sure whether people are getting too carried away, but certainly on the share price front, we broke neckline resistance at 0.9, and the last two sessions of last week, we spent the whole of that time above 0.9, so that's looking very encouraging. We also closed above the old gap there from December. That was at 0.98, and a gap closed buy signal can be a very reliable one, and so far it has been. Target here as high as 1.7, which I'm sure will delight the shares fans. And we've also got the 50-day moving average rising now, and if it's rising near the lows, that tends to be a very good signal on a technical basis. Nightcap, I believe that during the week they announced something about doing something in Birmingham, which may or may not have been the trigger for the latest move to the upside, but we broke the initial April resistance at 17 pence, and hopefully at least we'll get up to the 21 pence level, which was January resistance. But I'm looking for the end of the month target here up to 23 pence, which is basically post August resistance for the shares. Upside valid while we hold above the 50-day line at 16.5. Just a few more now in this marathon session, rather more marathon than I wanted it to be, but Oxford Biodynamics, again, another stock which is a bit too interesting to resist. We had a 3-day bear trap below the those lows of March at 19 pence, flicked higher very strongly on Friday and closed above the 50-day moving average at just around the 50-day moving average at 24. Also got a bullish divergence line there in the RSI window from December, so that's a pretty long-lived one, and that should provide the momentum for a move up towards the top of the triangle there from the beginning of December, as high as 45 or even 50 pence by the end of next month. And that's a bit of a punchy call, but good volumes there as well. This could be finally it in terms of the turnaround at Oxford over the near term. Just a couple of stocks to go now. As I said, there are too many to reject. Actually, there's so many to choose from, but this one a great one here in terms of Touchstone. We had a bear trap in March below the June-July support there at 77 pence. Gapped up off the low, so bear trap gap reversal. There's also a decent RSI pattern, but the main highlight here really is that we've held the gap, never got near to filling it, held above the top of the gap, and above the 50-day moving average at 88 pence. Looking for at least the March peak at 102 pence, and really up to the 110s, maybe by the end of next month. So a very strong pattern there for Touchstone on a charting basis. Finishing off with Woodbois, we've got shares again finally reacting in a decent way. Good bullish divergence there with the last lows from March and early April. We had that new low there, temporary new low there around 3.6 pence, and the RSI remained high. View now is that above the 50-day moving average at 3.94, we should head back towards 4.5, 4.75, maybe by the end of this month. But the real sizzle here is that we've hopefully turned the corner after a long period of downward consolidation, let's call it. That's it for me today. More updates during the week.